talk a little bit more though on Navitus. Julia Lee joining us live from Bell Direct in Sydney for a bit more on that. Julia, great to have you with us today. Recognising these impairment charges, I think in total there were multiple one-off charges totalling about $130 million. The stock at about a 3-year low there today. What did you make of the update from Navitus and the share price reaction?
Leanne, often when we get a new CEO, we do see a cleaning of the slate, and I guess this is a new CEO putting his stamp on the company. So look, Navitus shares did reach as low as $3.87 during the session, so nice to see that we have bounced off the lows there. But this mainly has to do with the creative part of its business, the creative media colleges that it has in the US. Now it did buy SAE, which is the creative media business, for $289 million back in 2010. And with the US side of the business, it really has been struggling. So look, it's looking to divest its 8 colleges that it has in the US. And look, these 8 colleges over in the US were expected to come in with an earnings loss of around about $3 million for FY18. So look, it does look like Navitus just restructuring to try and get a little bit more of a focus on profitability. And it has been a tough time. You know, we have seen changes to vocational funding here in Australia, which has impacted on the business. But I think the key for Navitus is not to lose any more contracts, which we have seen over the past couple of years. And also if it can gain a couple more contracts in the area of universities and really partner with universities, I think that could be a strength for Navitus. And that's something that IDP Education does extremely well.
Julia, let's talk Mesablast. 10% move higher at the close at $1.76. They've announced this new deal with China's Tasly Pharmaceutical Group, really opening up the Chinese market to their cardiovascular franchise. I was speaking with the CEO a little earlier, sort of saying that, you know, they're hoping to shake up this high growth cardiovascular market in China. It seems to be a bit of a game changer perhaps for Mesablast going forward. What was your view on the news today?
Look, this is a company that first hit the ASX boards back in 2004, so it's been an extremely long journey, as it is with a lot of these biotechs coming up with new technology in the healthcare space. So Mesablast deals in stem cells, and it's quite an exciting area. And it first really started to see a revenue stream from Temcell in Japan in 2016. I guess the exciting part of shareholders who have been on this extremely long journey with Mesablast is that we are getting to the pointy end of the stick, where we are starting to see assets potentially hitting the markets over the next 2 to 3 years. Now, most of their tier 1 assets, they're probably going to be looking for a partner for so whether it's a heart failure, which we've heard about today, back pain, rheumatoid arthritis, in the area of diabetes as well. And I guess in the area of the assets it has in its tier 1 portfolio, the most exciting I think is the congestive heart failure in terms of market size, because this is a global market worth about $5.4 billion US. So it's the biggest market for any of its tier 1 assets, and look, the most valuable when it comes to trying to value a company like Mesablast. So today's announcement, I guess there's been a $20 million equity purchase at $1.86, and that itself is around about a 20% premium to where the share price was. Also a $20 million upfront technology access fee, and then $25 million on product regulatory approval, double-digit escalating royalties on net product sales, and then you'll see some milestone payments in addition related, I think, to sales levels. So altogether, I think this is an extremely exciting announcement coming through from Mesablast, and really just demonstrates that it is coming to that commercialization revenue part of its business, and it's been a long time coming, but we're finally there.
Yeah, fantastic. Julia, we're almost out of time, but we saw this news coming out from Simek Group just after the market closed today. A jump in those profits of 12%, revenues up 11%. The interim dividend also very pleasing for shareholders, up about 17% or so. Very quick thought from you on that news from Simek after the market closed.
Look, I think the key is that they've kept their full-year guidance the same. So a few months ago, they came out to say that they expected net profit after tax to be between $720 to $760 million. So they've kept that the same. But in terms of the first half numbers, usually this is the softer part of the year, and that's because the first quarter tends to be a seasonally weak part, where you do see a lot of people going on holidays in January, not a lot of work being done. The conference call starts at 5 p.m. and look, some of the things that I'd be watching for are the very strong balance sheet that Simek has and whether it is looking at acquisitions, but also it is bidding on a number of different projects at the moment, and there's lots of talk that we're reaching peak infrastructure spend here in Australia, so it'll be interesting to get Simek's view on where that infrastructure market and spend is headed.